All right, hello everyone, and welcome to our latest ALTA Insights webinar. I'm Jeremy Yohe, ALTA's Vice President of Communications, and today we've got a great presentation lined up to go over the revisions to the ALTA best practices, when the changes will go into effect, and the impact on certification. Definitely a lot of interest in best practices. We had more than 1,100 people register for today's webinar. Before getting to the presentation, we have the pleasure of having ALTA CEO Diane Tom with us, who is going to share some information that could have some significant impact on the title industry. Diane?
Thank you, Jeremy. And before Tara and Craig dive into the update on the best practices, as Jeremy said, I wanted to be sure that if you haven't seen it, that you take the time to look at it. We put out an alert on Monday. And the purpose of that alert was to make sure you're aware of a pilot that we just recently became aware of, that Fannie Mae is considering to launch. The program itself that they are piloting would to buy loans without requiring the lender to obtain title insurance. Now, many of you know Fannie Mae, along with Freddie Mac, are the industry's largest customers. Decisions by either one of these organizations have a significant impact on the market. Our highest priority as your trade association is making sure that Fannie and Freddie require a lender's title policy on every loan they purchase. So over the next few weeks and months, you will see a host of articles and action items that ALTA in our publications and on our advocacy side. So please be on the lookout for them. And also, one thing that you can do immediately, which would be really helpful, is to sign up or renew your membership with TAN, the Title Action Network. That way you will receive all of the updates on this really, really significant issue that can have a really enormous threat to our industry. So as companies committed to ALTA's best practices, which both Craig and Tara are going to talk about today, the update, you guys are on the forefront of making sure we provide the best service to our customers. And we're committed to helping you by working to stop any product that puts customers at risk by foregoing title insurance. So please be on the lookout for, we're here working hard to fight this back, but we want to make sure we can activate all our members at the right time. So I appreciate the opportunity to share that with you. And speaking of industry commitment, I'd like to thank today's vendor and our SoftPro for their ongoing support of ALTA and for sponsoring today's important webinar. So Jeremy, let's go ahead and play the message from SoftPro.
SoftPro Select Hosted is your all-in-one solution for title and closing software. Save time and increase your company's profitability with IT support and data hosting, process automation, remote work capabilities, and low monthly costs. Plus, SoftPro Select Hosted includes our most popular features, such as integrations with over 65 third-party vendors, commercial closing capabilities, unlimited monthly transactions, access to SoftPro Sign for RON and e-signings, and more. To learn more about SoftPro Hosted, visit softprocorp.com/y-hosted.
All right. Thank you, SoftPro. Let me bring the presentation back. And Diane, thank you also for taking some time and sharing that information about Fannie Mae and how everyone can stay involved and stay engaged on this topic. All right, and with that, now let me introduce today's speakers and go over some quick housekeeping, then we'll get into the content. As a reminder, all of our webinars are recorded. You'll get an email with a link to the recording tomorrow, and you can always access all of ALTA's webinar recordings at alta.org/webinars. Right now, you can download a copy of the PDF of the presentation from the handout section in the GoToWebinar window. The email tomorrow will also have a link to download a copy of the PDF. If at any time you have a question, please submit them through the questions box. We do have a lot of content. We'll try and hold a few minutes at the end. If we don't get to your question, or if you have something afterward, feel free to shoot me an email, and we'll get your questions answered. Today's webinar does offer CE and CLE credit for many states. Credit is only available for those attending a live presentation, and our platform does track attendance. To meet state compliance, there will be a poll question during the webinar, monitoring how much you're paying attention, so no multitasking out there. At the end of the presentation, I'll provide a link to a survey where you can report your CE CLE credit, and we'll submit that to the entity that approves your credit, your education credit. For questions about that, you can send an email to education@alta.org. With that, joining us today, we have Craig Haskins. Craig is Chief Operating Officer of Wisconsin-based Knightberry Title. He is a member of ALTA's Board of Governors and also serves on a host of committees, including the Best Practices Executive Committee and Best Practices Work Group. Also joining us is Tara Smith. Tara is Group President of Agency Services for Stewart Title Guarantee Company. Tara also is a member of ALTA's board and serves on many committees, including Association Audit, Bylaws, Finance, and Investment Committees. So thank you both for your time, your commitment to ALTA and to our industry. And with that, Tara and Craig, I'll turn the presentation over to you.
Awesome, thank you. I don't know if you noticed, and I don't really know why I did this, but when you said my name, I pointed to myself in case the audience couldn't figure out which one was Tara and which one was Craig. But anyways, welcome to Best Practices 4.0. We're super excited. I know you are too. And there's a ton of stuff to get to, so we're gonna just jump right in. And Tara, if you want to start us off.
Yep. So as Craig said, lots to get through in a pretty short period of time. So we're going to cover really an overview of the best practices, more specifically what's changed from the prior versions. We'll discuss what resources are available to you and walk you through the assessment procedures to make sure that you and your organization are prepared for these changes. And so with that, let's dive right in. So starting with the overview and objectives that have changed. Next. So why is this important? We know there's a lot of risk in what we do. It can be very complicated, and following best practices framework helps to reduce the risk. It helps to protect all the parties involved, and the framework has been written to protect not just consumers and lenders, but really to also protect your business. So Craig.
All right, so the 7 best practices are on the screen. None of this should be new to you. We kept the same 7 pillars intact. There was some discussion on eliminating or consolidating a couple, but since everybody's used to the 7 pillars, everything's the same. So those are the 7. They're on screen in front of you. They're also available on the handout. So we'll jump right into some content on the next slide, Jeremy.
All right, so the world has changed. Our industry looks very different than it did 10 years ago when our original best practices were written and rolled out. Thinking through some of those changes, remote online notarizations were really just a concept a decade ago. Earnest money deposit apps didn't exist. Most workers were in the office 5 days a week. And then in the last decade, really so much has changed. We've seen an explosion of new technologies that are really now integral in our day-to-day operations. And then on the risk side, you think through wire fraud threats continue to plague our industry, but with far more sophistication than they had 10 years ago. And on top of all of that, obviously laws and regulations continue to change. So as the committee reviewed best practices and considered what changes were needed, we felt that there were 3 primary areas. Pillar 2 with escrow procedures, Pillar 3 with security plans, and Pillar 4 around settlement procedures.
Yeah, so staying on this slide, and actually Jeremy, I know there's a little lag between slide clicks, so go ahead and click and then we'll talk about the next one. But best practices from 10 years ago, if you remember 10 years ago, they were more of a defensive mechanism that we title agents and title folks put into place to sort of not lose lender business, because back then lenders were really concerned with how to vet, how to judge a title company. Because if you remember, through the new CFPB, the lenders were responsible for their vendors, which are us. And how did they measure back then? So we created best practices. So that was the focus, like how not to lose the lender business, how to keep lenders in check. So that's transitioned a little bit. Here we are 10 years later, and the strategy is a little bit different. The 4.0 version shouldn't just be looked at as like a lender compliance tool, which it is, but it also, maybe you should perhaps focus a little bit more on how the best practices could help improve your company, help improve your agency. So more of an offensive position, instead of just, we've got to do this so we don't lose lender business. Let's think of it more of, how can we do this to make us better instead of on the defensive end? And remember, like Tara said, 10 years ago, when we wrote the original best practices and I was on that committee, the following things, Tara started a list of them, didn't exist. You know, wire fraud wasn't as rampant as it is every day. This thing called the cloud, I don't know, didn't really exist in my world. Earnest money apps, Tara mentioned. Integrations, you heard our sponsor, SoftPro, on their opening commercial. They said they have 65 integrations with vendors into your title production software. Those really didn't exist 10 years ago. RON certainly didn't exist. Real-time payments, FedNow, all of that stuff, and TRID. It was just a thought. So all of those things are now into play, which is why we've updated these best practices. And we'll cover all of those changes here on the next few slides. Jeremy? Actually, you can click it twice, Jeremy, I think.
All right, so let's just, I'm going to quickly cover the various documents that are involved and the differences between them, because we'll be referencing these as we walk through the rest of the presentation. The main document that describes the best practices is referred to as the framework. You'll hear us refer to the framework really throughout. This is where all the pillars are detailed, and you've seen those really, again, as Craig said, they haven't changed. The 7 pillars are still there. Once you understand the framework, companies that implement best practices can certify their compliance with best practices in 2 ways. One is a third-party assessment, and the second is an internal assessment, which used to be referred to as a self-assessment. And there are certification reports available for both of those. And then finally, the best practices assessment procedures. Those are the testing steps that are used during the third-party assessment and are really optional for the self-assessment if that's the path you choose. All of these resources are available on ALTA's website, alta.org, under the best practices section. All right, next. So starting in the definition section, there were just some minor wording updates to a few of the definitions on 3-way reconciliations, licenses, escrow, and escrow trust accounts. So just minor wording changes to really clarify, making sure that the definition is appropriately defining those terms throughout the document. I'm not going to read through each of these in detail, but just wanted to call out some of those updates that were made. And then next, also within the definition section, we've defined the players. So in the previous version, consumers, title agents, title insurers, or underwriters, those terms were used throughout the documents, but were never really actually defined in terms of what is a consumer, what is a title agent, what is a title insurer. So we've clarified all of that in the definition section as well.
It's neat too, Tara, because you could tell back when we wrote the original 7 that 7 different groups of people wrote the 7 best practices, because sometimes they referred to you at Stewart as an underwriter, sometimes a title company, sometimes an insurer. So we finally honed it in and kind of streamlined the definition. So I think those are important changes.
Clean that up throughout, so terms are consistent now throughout the entire document.
All right, looks like we have our first poll question to make sure everyone is still paying attention out there. So real quick, if you don't mind answering, don't worry, we're not going to report you maybe if you haven't been certified or anything. 10 more seconds. So if you need CE, CLE, get your answer in. All right, we're going ahead and close it. 59% said yes, have been certified.
Well, that's good.
Great. Yeah.
That's interesting, the way to keep you guys paying attention to our silly comments and jokes on some of these. So it's interesting.
All right. So now into the updates to the actual pillars, as we talked about. First, the purpose section in Pillar 2 here has been updated to really just clarify that an agent may suffer losses directly, that without proper controls and procedures, there are losses that may not be covered by E&O insurance, the title insurer, or anyone else. So it's important to follow best practices 2 perfectly, which to reduce those risks that you personally as the title company may suffer and not be covered by someone else.
Oh, are you gonna finally let me have a slide? Is that what we're doing here? So, all right. So Pillar 2, we're still in Pillar 2. Here's an interesting change. My opinion, I think this is probably one of the most, if not the most important change on Pillar 2, having to deal with escrows. Pay close attention to what happens if an incoming fund for your closing could be reversed, like a paper check, some earnest money type apps, and some of the other new payment rails. You're going to hear a lot of the term payment rails this year with real-time payments and FedNow and things that are the first change in 30 to 40 years since ACH. So we have to be very careful that the deposits that you're taking are not reversible or can't be reversed. So it's something you should pay close attention to. And I think an easy example of this is, let's say, and I know some states are different, it's very hard to write 7 perfectly beautifully crafted pillars to cover all 50 states. So bear with us on some of this. But let's say, for an example, a closing's finished, the buyers walk in, they've already deposited all their funds, everything looks great, and then there's a minor change and you need, $20 from the buyer. Are you going to accept a very small personal check from the buyer to rectify that issue, even though a personal check could be canceled or reversed? So this is one of the reasons in this pillar where we say, in making disbursements from your trust account, that you should ensure that undue risk, and thanks to Jeff at Old Republic for writing this term, undue risk is not being undertaken for deposits that are not fully settled. So what does that mean? It's a little squishy, so it gives you a little leeway in this. So maybe your agency is okay with taking that $20 personal check, if your state allows, from the buyer to clean up a last second change. Is that an undue risk? So if we didn't have that in there, it would say absolutely not, because a paper check is reversible. The main point of this change in best practices is that accepting funds and then wiring them out before they have cleared, or if they're reversible, is something that is a critical point that you can't do. Now, the leeway is the undue risk. So don't want to spend too much time on the slide, but the big one is wiring off of your float. Accepting paper or reversible funds as your deposit, turning around and wiring them right out before they've cleared or before they've become non-reversible. Okay, next slide.
Yeah, but I think just one more point on that was in practice, obviously, title companies were doing that, but the prior version of best practices said under no circumstances can you do it. And so it really is, to your point, each company setting their own threshold of what they're comfortable with. And so the update to best practice, I think, was necessary there to reflect actual practices.
But if you're a small agent and you're accepting $1 million personal check to wire off funds, maybe that doesn't comply with undue risk for you. Maybe it does for a giant title company. I don't know. Everyone sets their own limitations, and be ready to explain that if someone asks you on that section of Pillar 2. Okay, Tara, next slide. Oh, yep. The one you're on, actually.
Yeah, this one here is just a simple reminder was added that companies should follow the good fund laws in the states that they operate, and be aware also, in addition to the good fund laws, be aware of that your underwriters may also have requirements or guidelines on how you handle the trust accounts. Generally, that is spelled out in your underwriting agreements with your underwriters. So.
Got it. Okay, so you'll start seeing the word fintech. So as the financial technology has crept into our business, you have to remember there are some changes that we need to make in best practice, especially in section 2, to kind of catch us up with what's happening in reality. The old best practices said positive pay needs to be used on your escrow accounts if it's available in your market. If it wasn't, no worries. Well, now we haven't found a single market in the country in which there's not an option to bank with someone or use an escrow account at a place that doesn't have positive pay. So now positive pay is required on all your accounts. if available for the payment type. Now, what does that mean? If you're using, one of the new fintech payment types like FedNow or real-time payments, we're not really sure how that's going to affect positive pay. So if it's available for however you're making payments from your escrow account, you need to use positive pay. Let's see. Also, on the second section of that slide on your screen, the second box, pay close attention to the differences between the earnest money providers, the apps that are out there, to make sure that whichever system you're using can't back out or reverse any of the money that's been deposited. So make sure that there aren't any chances where what you think has been deposited through an earnest money app is reversed out. So that's another section of best practices that you need to do some work on your end to make sure the provider has that safeguard in place. You want to know the money's there and it can't be taken. All right, next slide.
Right, this part of Pillar 2 is really talking about having a written wire transfer procedures in place and testing those annually. The update here, though, is that these procedures should include the use of multi-factor authentication, again, something that wasn't prevalent 10 years ago, and that your procedures should contain, at a minimum, the controls that are documented in the ALTA outgoing wire preparation checklist. Following these procedures will significantly reduce the risk of wire fraud. Verifying wiring instructions before sending. So I think that's next slide.
I take back my earlier point. I think that's the most important section on best practices part 2 here, Pillar 2, is having a really solid, secure, safe wire plan. And we'll talk a little bit more about that in a little while on the next slide too, or on the next pillar. So, all right, so background checks. This was, so as you might know, we produce some comments through committees on different sections of the pillars that our executive committee is working on. And then we open it up for the public comments. We were bombarded with comments on how in-depth your background checks need to be. We initially toyed around with the idea of requiring anyone with access to money in your organization have a credit report. A lot of title companies, including mine, do that, but it's not required, so it's not in there. It was in the draft. We heard overwhelming content that we don't want it in there, so it's not in there. However, background checks are now required for all of your employees. Previously, it was limited to just those employees who had access to closing funds, but now it's expanded to all employees, since presumably all of your employees have access to some private information in the file. Now, if you object to that and you're worried about that, don't fret here. I want to take a moment to introduce you to the internal assessment forms. I'm not going to do that on the screen, but as part of this presentation attachments, there are your internal and your third-party certification assessment forms. The form can be used when doing your assessments, and it includes a representation letter where you tell whoever's asking you for your best practice certification that you comply or not with all of the best practices as they're written. However, what if your company doesn't provide a background check on every single employee at your company, because maybe some of your employees don't have access to money or private information? Maybe you have a few employees who don't touch anything, and you're thinking, why do I need to spend the money to run a background check on them? Great, that's a good point. So that's the section on your assessments that allows you to say, I don't fully comply as written with best practice 2, and attached to the letter is an addendum where you'll explain, look, several of my employees don't have access to money or information. Why would I need to background check them? Okay, that's a good point. So that carve out is available on all 7 best practice pillars. So if there's something that you just perfectly don't comply with as written, no worries, write it in there. And I can't imagine that any of your customers would see your best practices with that explanation and go, oh, we're not, XYZ title company, they're banned from being our vendor now. We're not using them because of this. So write yourself we don't pass this section, and here's how we're remedying that, or here's why we're not remedying that. And if it makes sense to your customer, fine. All right. And each pillar has that exception that allows you to extract whatever language you need to say why you're not perfectly, maybe it doesn't work in your state or your local market. No worries. All right. So background checks on all employees. Tara.
Okay, Pillar 2, aging balances. So this one is a pretty simple update. Files with stale balances represent an increased risk of employee theft, and this part of Pillar 2's updates specify that a manager should really be involved in reviewing the stale funds that are older than 6 months to determine the appropriate status or action of those funds. I think as previously written, it just said that stale funds should be reviewed, but this is really specifying who should be involved in that review process and taking action as appropriate or no action. I mean, as you know, that there's oftentimes funds will sit there stale for however long they need to based on whatever the action or issue is. So again, just specifying the manager's involvement in that process. Okay, and then still in pillar 2, wire verification services. So I think the clarification here is that a company can have really the best policies and procedures defined, as we talked about 2 or 3 slides back, but still be exposed to significant risk because, as we all know, you're relying on humans to follow those policies and procedures. And we know that even with the best of intentions, mistakes can be made. And that's why the update here for best practices is that now recommends that wire verification services be used. So wire fraud, as I mentioned earlier, remains one of the biggest risks in our industry. And with advancements in technology, it means that we have the ability now to verify every outgoing wire is actually going to the intended recipient before it's sent. So where it is available, efficient, and economical, best practices instructs now that agents must use this technology.
So the 3 squishy words, available, efficient, economical. If your agency says, look, it's not efficient or economical for us to protect wires through a wire verification services, then mark that on your internal assessment. But you know, I don't think my company could live without it. So I'll just make that editorial comment.
Yeah.
All right.
All right, and then I think this is the last update in pillar 2 is around reconciling and discrepancies. So best practices have always specified that daily reconciliations should be performed, specifically reconciling the escrow bank balance and the escrow book balance. Sometimes that's called a daily 2-way reconciliation versus the 3-way reconciliation that's required on a monthly basis. But the update here specifies that performing the daily reconciliation is not enough, that you actually have to review the results of that reconciliation and then take action on those discrepancies. And that can really protect your organization from potential losses that you would catch much sooner, losses or errors that you would catch much sooner than waiting till your 3-way monthly reconciliation after the month close.
So, and I just want to reiterate before we go to the next slide here, we're only covering things that have changed. So just if we don't talk about them, that doesn't mean they're not still there. You still have to do your monthly 3-way reconciliation. It's not a slide because it hasn't changed. Okay. All right, next slide. Pillar 3. Whew, all you escrow nerds, we're finished with you, and it's time for the real nerds. This is IT, tech stuff, private information, NPI, all of those fascinating things. You think there's been any changes in that industry in the last 10 years? Probably every month. So here's the main thing in best practice, pillar 3. It's a new term, maybe you've heard it, maybe you haven't. We're gonna call it the Written Information Security Plan, WISP. You'll see that a lot. And in fact, in your own agency, if you haven't seen that, I'd suggest that become familiar with it because that's something lenders are starting to ask for a copy of your WISP. Written Information Security Plan, Security Program, something like that. It's your master plan for how you protect private information that doesn't belong to you, paper or digital. Everything you do for best practices 3 should be in it. So your WISP, if you don't have one, take every part of best practices pillar 3 and create a new Word doc and address every little part of best practice 3 and say, this is what we do. That's a great start. But you should definitely, and you're required to have a written information security plan under pillar 3. And we'll go to the next slide and Tara can take that really confusing one next.
All right, so the prior version of best practices said that companies should establish a written information security plan to protect non-public information, but the updates here specify that this should include multi-factor authentication, again, an update that we've really seen since the prior version. It should also include password management plan with specific requirements for those passwords, and timely software updates to keep systems up to date. So this is another update reflecting how much things have changed since the original best practices were published, and you can see the initial wording was very short and simple, and it's been blown out significantly to address all these additional areas.
Yeah, and the CFPB released the bulletin, I think August 12th or something last summer, right when we were in the middle of drafting these, and they said, hey, if you're in the financial services industry regulated by us, these are some things you should have. So those hollow pointed bullets, I don't know if that came out right. Yeah, it did. Hollow pointed bullets that you're seeing there. That's straight from the CFPB. One of the interesting comments we got after these were published, and it's a brilliant comment, is where it requires you to change your passwords in some interval. Someone said, why would you ever change a password? If you've got a complex, difficult to guess password that works, don't ever change it. And it's a great point. So we have to think back in best practices committee now, how we address that. Because what if you have like this crazy, I think Tara, you said you have a 12-character password with
16,
letters.
our company recently switched to a 16-character password requirement. That's changed semi-annually.
So those are very difficult to guess. So if you finally have a perfectly working password, why would you change it? So we've heard that point. The current, as written today, you are required to have passwords that expire after a certain period of time. You get to pick that time and have an answer when someone asking you about your best practice procedures. Tell them why you picked that time, why you picked that difficult of a password. Okay, next slide. Oh, this is me again. All right. So best practices pillar 3, we've broken security into a security of NPI, non-public personal information. We've broken that into 2 sections now. One, physical. So you're holding their NPI, you've got a loan app, or you've got some social security numbers or something that's private in paper or files or folders or filing cabinets. And then also the second one that's broken into is network security, where now that you've reduced that paper into a scan, how secure is that? So this slide talks about what you need to do to restrict access to physical stuff. Tara's going to touch on the next slide, which we can switch to, about things in the cloud.
Yep, so as Craig just covered the differences between physical security and network security, but here when talking about specifically with network security, the best practices have been updated to include the need to secure NPI on the cloud as well as locally hosted networks. So cloud storage, as Craig mentioned at the beginning, is something that's new compared to when the best practices were originally written. And cloud storage has become common practice today, but also raises risks, as we saw during the CloudStar ransomware incident in 2021. So I think that's a great segue into the next update, talking about disaster recovery and business continuity plans.
Okay, so what happens in the event of a disaster, and how will you get your business back up and running for consumers to have their closings? Example, in this slide, I'm going to focus on natural disasters. Why? Because I've had a few of them. We've had an office burned down in Madison, Wisconsin. No one was hurt in the middle of the business day. Shout out June Potter for helping us with that one. We've had an office in Minnesota closed because of a blizzard incoming, and we've had offices in Florida. We've had an office last year that was completely wrecked due to a hurricane. So what if it happens to you? How do you get your business back up and running? How can buyers and sellers be confident? And how are they going to be notified about their important closing, which is obviously now delayed? Another type of disaster that questions your ability to do business is a cybersecurity breach or a hack. Tara's going to handle that on the next slide. And by the way, this reminds me, why in the world did we give you all of the very difficult techie slides? Are you, it's just, but you're going to take this one too.
Craig, you assigned the slides, if you recall.
Yeah, see how that works?
All right, so application to all cybersecurity incidents. So the point is updated, this point is updated that requires the written response plan to address any cybersecurity incident, not just those that are involving NPI, as it was previously written in the prior version. It also goes on to specify that the plan should include periodic testing, should also follow the recommendations of the ALTA Cybersecurity Incident Response Plan, which again can be found on ALTA's website, alta.org. And that does a great job of really walking a company through how to respond to an incident. So lots of resources made available as your company builds out your own plan. Make sure that you're utilizing the resources that ALTA's pulled together to help you respond to any of these incidences as they occur.
Yeah, so periodic testing. So we actually do require our office managers in October of every year to test our disaster recovery and what happens. What do they take out of the office? What do they leave? What do, get out quick? Or is it a blizzard in 3 days coming? You've got time to kind of wind down and prepare. So we actually test all of those things, and it's required in best practice pillar 3 that you should also test it and just make some note of when you tested it and how you tested it. It's not that difficult once you get into the groove of it. And it's to the cybersecurity. If you have someone hack into your server and steal some files and you just say, sweep that under the rug, you got to report that. There's an incident report form that will walk you through that. It'll also talk about what you can do in the future to prevent things like that. So these are serious matters.
I think as you talk about the testing, it's so important because if or when something happens, isn't the time for you to be ironing out the details of your process. You want to understand, everyone needs to know what they're responsible for doing. And during an incident isn't when you want to be ironing those details out.
Yeah, I agree with that. All right, let's see. All right, next slide. So we're on, okay, written service provider policies. So do you have third-party vendors who have access to your files? What do you do about that? This says you should choose vendors who have data security policies consistent with your WISP. So does this mean that you need to provide anyone, remember in the SoftPro commercial earlier, they provide integrations with 65 different vendors right into your SoftPro. What are you doing about that? Do you need to make sure those 65 people have the same data security plan and take it as serious as you do? Do you need to review their WISP or white papers? What do you need to do? Do you need to provide them with a copy of your WISP and say, here's what I need to make sure you do to protect my data? I think that might be something logical. Maybe. That's what I do. I say, here, vendor, this is what we do to protect our customers. Can you comply with that? And how? You can't just not do anything and say, hey, anybody can log into my title production software. If there is a loss of consumer information, especially consumer information, you're going to need to answer what step you took to select that vendor that may have just caused you to lose consumers' MPI. And if you say, well, I didn't really do anything, it just sounded great, the program was affordable, and I thought it was awesome, probably not going to get you very far. So I think you need to do a little bit more. No, I know you need to do a little bit more because it says it right there in pillar 3. All right, on the next slide, software tools and resources. I wish I would have looked at that SoftPro commercial earlier than I did. First, blindly seeing it at the intro here from Jeremy with their 65 integrations. I didn't know it was that many. But here on this slide, software tools and resources, people that can get into your systems. We're talking about not only the previous group of people, but also the dozens of great tools that might help your company provide services. Again, are you going to just turn over the keys and passwords to all of them to do some work? Or what level of trust do you need to give them to comply with your WISP? And this is the integration slide here. So make sure if you're going to integrate with any third-party systems, software, processes, APIs, overseas, on seas, offshore, off source, and they're getting into your stuff where there's private information, you need to do a little bit better than we did at the last version of best practices with analyzing that. I think that's the end of pillar 3. So we're through the money and we're through the techie stuff. Now let's talk about this one.
All right, so we're moving into pillar 4, which focuses on the actual settlement processes within your organization. So first, just a small update for the description. So pillar 4's description was updated to point out that in addition to the federal and state laws and regulations, your settlement policies and procedures should also consider the contractual obligations that you may have. Again, so for complying with terms of your underwriting agreements. So just adding that into the description section of pillar 4. And then moving on to training of consumer objectives. So focusing on the customer here, this section previously read that you should review legal and contractual requirements to determine company obligations to record documents, period. That's all it said in this section. So you can see the updates here, but the updates really include considering the consumer objective. So specifically creating a more formal training plan as opposed to the old system that might have just been like, hey, sit with Karen for the next 2 weeks and she'll show you how we do this. It's formalizing this employee training that will help minimize the errors and complaints, and consumer complaints are addressed in Pillar 7, but having the right processes, training your staff on that, formalizing that training and documentation will really help in reducing any of those consumer complaints that you might have to address in Pillar 7.
Yeah, I mean, Pillar 4 is all about the consumer experience in a closing and how we can improve that. And it all starts with that first thing about training your staff. I mean, title companies are really good at hiring people and saying, well, what's the training program? Like you said, go sit with Karen for a couple weeks. That's all you really need to know. Do what she does. Maybe you should have some.
Or you've hired them from another title company, and so you take their processes and assume that that's going to work in your organization.
Yeah, but then you've got a new person in the office saying, that's not the way I did it at the old company. This is the way I do, so having some type of a formal, maybe it doesn't have to be long, maybe just some bulleted points of what your training process is for someone new, specifically in this section in your completion of the settlement or the closing. All right, the next one is affiliated business arrangements. These are hot, aren't they? RESPA requires that when a title company, let's just use a title agency as part of an affiliated business arrangement. You can also think of these as like a joint venture partnership between your local title company and a local real estate firm. The consumer must be notified of this relationship with, say, the realtor, so that the consumer knows that they're free to shop around, that they're not bound to use the company, their internal title company at the realtor's office. So that's a required disclosure form that must be given. There are other parts of the disclosure that need to be made, but the point is that if you're part of a venture or an affiliated arrangement, you should take an active role to make sure the disclosure is being made properly. Note that it doesn't say that you, the title person, needs to make sure that the realtor's giving the actual disclosure. It doesn't say it in best practices. It just says to make sure that there is a process in place in which this happens, to make sure those arrangements are disclosed. And I have a few of these situations or these ventures in place. We know the exact process of how and when a consumer is notified of the arrangement, and it's all documented. So I would highly advise to comply with this slide, that you have a very good understanding of how the consumer, when the consumer, and how the consumer is getting that disclosure. So that's now wasn't part of the original best practices, but it's in there now. All right, next slide.
Okay, this one's mine. So updates here. Again, it's a good idea to write down your specific settlement procedures, not just this is how we've always done it. Have them written down, specify how your employees are supposed to conduct a transaction, and then providing training procedures that ensure the documents are being prepared and executed properly. And it's not enough to just say our staff is trained by other closers. So documenting the actual steps and then training your staff on it.
And I know documentation sounds very difficult. It's really not. And it's so valuable because you have the framework and the baseline of what you do to train someone, say, to record a document. And then you can just expand on that document as you get a little more into the process of maybe recording in different counties or different documents or different platforms, whether you walk the paper to the courthouse, mail the paper to the courthouse, I don't know who does that anymore, or e-record. Having those things documented is definitely helpful. Okay.
Well, and having it all in place, every time you onboard a new employee just makes it so much easier that it's a formalized, documented process.
Without a doubt.
Consistent.
Okay, so the next few slides are about signing professionals. These are the folks that sit in front of the consumers and point, here's where to sign, they explain the document, they notarize. So we're gonna talk about the signing professionals. You have to make sure, this slide says, make sure anyone in your organization is qualified to perform a notarial act. So if they're going to be notarizing, you have to make sure they comply with all of the requirements, legal and contractual, including whatever state regs, title insurance requirements, or whatever, to be able to handle that signing properly. So this is professionals in your organization. All right, next slide. Next slide's kind of a throwback to remember, to remind you that your signing professionals also have to undergo a background check, which we've already talked about in Pillar 2. So you should already know when you get to this part of Pillar 4 that your people who are working for you as signing professionals employed by the company have background checks already completed. All right, now let's talk about third-party notaries, third-party signing professionals. I think that's the way we've defined them over the years. You might say mobile notaries or witness closers or third-party signers or whatever. For these folks that you select, you have to make sure they qualify. Don't just Google like, who's the nicest notary in Catonsville, Maryland? You shouldn't really
But
do
don't
that.
you want a nice notary? I mean,
You do, but it's not the only qualification. And by the way, if you ever go to Catonsville, Maryland, shout out Catonsville, Maryland, there's a snowball stand called Opie's, and it's amazing. All right, but anyway,
I'll look at it next time I'm in. What did you say?
Catonsville. It's a suburb of Baltimore.
Okay.
Anyways, so my family grew up there. Anyways, sidetrack. So for these third-party notaries, these are when you're going to package the deal together and send it off to someone else to be the notary. You need to make sure they qualify. Okay, this is substantial changes here. You have to make sure that whoever you're sending, that notary, better have E&O, a surety bond if required by the state. Make sure your title insurer, if they're going to sign documents that you happen to be insurable documents in your transaction, you better make sure your underwriter's okay with this too. Make sure they're trained. They're not just notaries to say point here, sign here. Maybe they need to explain the documents. Maybe they need a little more training. So third party, don't just Google nicest notary in Catonsville, Maryland. Actually do some vetting of them. All right, so then you're going to think, well, on the next slide, well, gee, Craig, I use notaries all the time. There's dozens of them that we might use in a day or a week or month or a year. That's a lot of work. Well, here's the little caveat. And I'm just going to shout out the company we use is called First Class Signing Services. So I have a company that does all of that for us. So we use a vendor, and they make sure that all of their notaries that are going to go do closings for me are vetted, licensed, insured, trained. They do all that. So if you're using a company like a vendor, then the vendor assumes all the obligations of vetting all their individual notaries. That's cool. That's cool. You don't have to call all 100 of them that are being used. The third-party notary companies do that for you. All right. Another big change that never even existed back in 2011 and 12 when we wrote that.
That's right. This section is a complete edition. It's not an update. It's a complete add. So this is where providing requirements on how to appropriately conduct RON transactions. Again, something we weren't maybe contemplating 10 years ago, but specifically that RON platforms must be authorized by the state, approved by your underwriters, and must meet minimum requirements of the state laws and/or underwriter guidelines. So as you evaluate your RON platforms, make sure they're meeting those requirements, and then also specifically carving out that agents must charge fees, or all fees must be charged as authorized by the state regulations, and that is handled differently in many states. So really understanding what fees are allowed to be charged to the consumer versus not as it relates to these RON platforms. So complete edition, providing some content and context around how to appropriately select and evaluate your RON providers. And this is me too. So e-recording vendors. So another addition that was not in the prior version specifically addresses the e-recording processes. E-recordings are obviously common practice today, as Craig said, not many people walking to the courthouse. So this section specifies that e-recordings must comply with the local laws and regulations, and you should have a contract in place with that vendor specifically. And
we talked a lot on this next one. I know this is your slide too, but we did talk a lot about escrow trust accounts in slide 2. This one, I think you're just sneaking in the fact that the e-recording accounts are part of this too, right?
Yep, they are. So continuing on that, that e-recording accounts are supposed to be reconciled also. not just as we talked in section 2 or pillar 2. So e-recording accounts are supposed to be reconciled. We understand that they can be messy, but it's important to have the appropriate controls in place around your e-recording accounts too, because there can be a lot of money sitting in those accounts also.
And those accounts are so messy, like you said, Tara. There's stuff coming and going all the time. It's not like a payoff where you send one check. I mean, those are difficult. So we acknowledge it is a difficult task to reconcile the e-recording account. But when you have transfer fees and mortgage registration fees and all the different fees along with the recording of those documents, there could be some significant money that's not yours sitting in that account, and you need to have the proper controls in place.
Yeah. All right, so that wraps us up with pillar 4, and we're jumping into pillar 6 here, which requires companies to have the appropriate levels of insurance coverage to comply with the requirement and comply with the requirements of that coverage. So have the coverage and comply with the requirements. The update here, though, is to add that you should also specifically thoroughly review that coverage on an annual basis. What are the coverage limits? What exceptions are included? Because those are changing frequently. The insurance carriers are making updates constantly as additional threats and risks are emerging in our industry. So really important that you understand your coverages, what's included, what's not, and then what are your requirements. What do you need to be doing in order for that coverage to actually be in place, that you're not doing something that violates that coverage.
There's nothing more boring than reviewing your company's insurance programs. So we acknowledge, super boring, super not fun, and they go up every year, right? But you have to do it. I think we should slip. Yeah. Why don't you take this easy one?
Yeah, this is really just to call out that in pillar 5 and 7, no substantive changes were made here. Pillar 5 is policy production, reporting, and the remittance processes, and pillar 7 is procedures around, as I mentioned earlier, the consumer complaints, and maybe like very slight word changes, but no substantive changes for pillar 5 and 7. So I think we're going to move in. Oh, no, poll question.
One more poll question here. Let me launch that, and then we'll wrap up with resources that have changed. So if you remember earlier in the presentation, what were some of the main drivers for changes to the best practices? Few of you are seeing the humor and picking spy balloons. So we'll go ahead and close with.
We need a pillar 8, Jeremy. Pillar 8 that addresses spy balloons.
New pillar for next time. All right, let's close this and get back to the presentation.
All right, I think we're moving into talking about the resources that are available to support best practices and what has changed within those. So, all right, I'm going to breeze through some of this because we talked about it at the beginning that the framework are the actual pillars. We've just talked through all the changes that are in the framework. The assessment procedures and the certification reports that have been updated to align to that new framework. And then there are other supporting documents available online as well, including frequently asked questions, policy guidance, sample outlines, and templates that you can use as your company is working through implementing the best practices, either implementing for the first time or implementing the updates. And again, these can all be found on ALTA's website, alta.org, under the best practices section. So how do you perform an assessment and certify? So really, as I said, there's 2 different types of assessments. You can do a third-party assessment, which is hiring an outside firm to come in, evaluate, and that outside firm will use the assessment procedures. They will use those procedures as a tool for evaluating your compliance. It goes through testing steps. It's pretty detailed. So third party will use those assessment procedures, or you can do an internal assessment. And as I said, that was formerly known as a self-assessment. So internal assessments can be done in a number of ways. You may be someone like Craig who knows every process and procedure within his organization and can self do that internal assessment, or you may do an internal assessment and go through those assessment procedures and all the testing processes. So two different, again, really here just talking about the two different types. And then online you can find all the various policies and procedure templates, which can be really helpful as you start to document things within your organization that maybe haven't been documented before.
Question for you, Tara. Are you aware of any, when best practices first came around, there were a lot of firms out there providing third-party certification for title agents. Is there a resource that the viewers can go to maybe find some of those if they're, and then I have a comment on the internal assessment as well.
Yeah, there are various companies across the country that do that. I think I think they're on ALTA's website. I'm not positive though.
Okay, so we'll find that answer for you because I know that was a common question that was coming in. Now, on the assessments, so I was on the original folks that wrote the best practices 10, 11 years ago. Our company has 83 offices in 5 states, about 500 employees. So, but we've never done a third-party assessment. We've always done an internal assessment. And this is going to come down to what your customers require you to do, what your owner or management wants. Maybe you think it's better for, maybe you have a hands-off owner who wants to make sure you're compliant and doesn't know the ins and outs of the company like I know ours. And that third party might be appropriate, or maybe you just want a third party. So either one of them work, but if you're someone like me, I do a self-assessment and then I document everything, which are on all the forms that are available on the ALTA website. And then I give them to the customers that ask me, mostly lenders, to say, hey, are you compliant with your industry's standards? And I say, yes, here they are. Here's my self-assessment. It's us analyzing all 7 pillars and saying, this is what we do in each of those 7 pillars to be compliant. That's a self-assessment. Or I'm sorry, an internal, I'm going to say, we changed the term to internal assessment report. We used to call it self-assessment, but you get it, you get it. So, all right, so next slide is a chart that I can't stand, but Tara, you can take this one. I just don't know what's going on here.
It's just walking through that under either one, the third party or the internal certification, they're both following the standard, they're both following the framework. The third party assessment is following those assessment procedures. Internal assessment may use those assessment procedures, or it may just assessment procedures which actually have testing procedures and do all of these things, or you can certify based on your knowledge of the organization. And then they both have a certification report. One is called an internal assessment rep letter, and one is an actual third-party assessment report.
Got it. Okay, remember the example I gave from background checks earlier where you said, well, we have all these employees, we do background, but we're not going to do it on Bill and Sally because they don't have access to money or private information. So why would I go through the expense and effort to do that? This is sort of, I'll walk you through it here. So pay attention to the Romanette number 1. So in this particular background check part of the best practice 2, I would say on number 1, we don't completely comply entirely with best practice 2. Little Romanette 2, we're documenting why, because Sally and Bill don't have access to money or information. 3, there is no remediation time period because we're not doing it. And 4, there's no plan to do it. And 5, it's completed by Craig Haskins at Knightberry Title. So that's sort of how you could walk through each of those steps where you have an exception to something that you don't comply because it doesn't apply to you, or it doesn't work in your market, or your state has different rules. We get it. This is how you document it. And all the forms are there. They're very, very easy to fill out.
But so, that also applies to something, an area that maybe you don't comply because it's new here and it's going to take some time for your organization to implement it. So you could say, we don't comply because of this specific section, and here's our plan to remediate that, and we're in the process of implementing it, and it will be ready in, whatever
exactly.
date.
Perfect. Yeah. So if you need some time, document it. I've never, in fact, life hack, I've sent a lender self-certification, internal certification before, saying, look, we don't have expiring passwords the way the best practice pillars say to. but we're working on it, and we're going to have this figured out by the end of the year, our tech team. Lenders love that versus handing them something that says, here, I'm amazing. I comply with all 7 BPs. I say, well, we're working on this one. This is what we're doing. This is how long it will take. They love that. Lenders love that. To say that you're not perfect to a lender, but you're working on it, those compliance departments at banks really love that. And it's honest, right? You want to be honest with exactly what you're doing. So let's go to the process and timing slide. Thank you for pointing out that, Tara.
All right, so we published the new best practices or the updated best practices in January. So we started the process, I don't know, 18 months ago, went through a detailed process with the best practices committee, then put them out for public comment, then approved them through all the various levels within ALTA up through the Board of Governors, published them on January 23rd, and then the effective date, meaning they go into effect in May 23rd. It's 90 days to implement. So everyone has that time period to actually implement the best practices.
Yeah, and the trick here too is the last bullet there on certification timeline. If you just did this,
days, that wasn't 90 days, 120. Yeah.
I was gonna let that slide.
There's 725 people on the webinar. I'm sure someone was like, that's not 90 days.
Yeah, doing math in your head during a webinar is never fun or easy. So let's say you just went through the process of certifying, whether you did a third party, you did it internally, and it cost you a lot of money and time, and you got it done, and all of a sudden ALTA publishes these new standards. Your old assessment is good for 2 years. So the example we give you, if you just did this last summer, your old assessment under 3.0 is technically good through 2024. However, if a lender says, hey, we understand there's some new revisions, how do you comply with them? You know what I would do is just do an internal assessment to supplement what you've done, to say, here's my 3.0 assessment, here's what we're doing to become best practice compliant under 4.0. But I don't really think, so if you just do one on May, what is it? What if you get assessed or you do your thing on May 1st, 2023? Are you just gonna blow off best practices for a couple of years? I don't think anyone will, but there is a little timing overlap here. So your current assessment's still valid, but bring it up to speed to the 4.0. It's not terribly difficult. There's a lot of important things in here. And I'd love to see everybody get on board with 4.0 come May. All right.
All right, so how do you
prepare? But Diane did take some of our time, so let's keep going.
All right, so it's really recommended that you assign primary responsibility for someone to own this as a project. So having an individual who really understands what's changed, how does your organization align to the standards, and then as I said a couple times, there are a number of resources available through ALTA to help you. And then, that you're going to have to decide how you want to certify, internal versus the third party. And then Craig went through the timelines around that your certification, 24 months from the prior certification. So any other comments you want to make on that one?
We sort of had fun with ours. We broke the 7 pillars into 7 different groups of people and assigned them to folks. So it wasn't one person doing all the work, and everyone kind of took seriously their own section of it, and it was really helped to divide and conquer, so you didn't stick all that work on 1 or 2 people. Anyways, I think that's the end of it. I think we've blown past the time. I'll rely on Jeremy here. There he is, to let us know what you want us to do next, other than thanking everyone, especially the folks that served on the executive committee to write these, and all of the subcommittees that wrote all the specialty language in this. So Jeremy.
Yeah, thank you to everyone's work. Thank you to everyone's work. A lot of effort that goes into developing, updating the best practices. We are a little bit over. I posted the link to submit your CE CLE in the chat box, so make sure you grab that if you need to get credit. Just a reminder, if you missed parts of today's webinar, I think others would benefit from listening. The recording will be available on ALTA's website tomorrow. It's alta.org/webinars. You'll also get an email tomorrow with a link to the recording and a link to the presentation. I do need to thank SoftPro once again for sponsoring today's webinar. We tried to add a few of the questions throughout the presentation. We're already 5 minutes over. We do have lots of resources on the ALTA website best dash practices URL. Couple questions about other resources there. There's a few other documents to help with going through the assessment, right, Tara, Craig? There's the workbook that has been updated and available. There's the framework document to help guide people through the process, right?
Yes. Yep.
For sure. And I think, Jeremy, one of the main questions on the passwords, I think we did address that the nice part about this, now we haven't updated best practices in this big of a sense, if you will, from 1.0 to 4.0. There's minor changes along the way, but we're not going to wait 10 more years to do another drastic overhaul. The committee is going to be focused more at a couple times a year on looking at different things that are affecting the industry now that didn't exist in January when these were published. So we're going to stay on top of these things. And one of the first things our work group's going to look at in our meeting in St. Louis is the question that a few people have already been submitting about expiring passwords, and how one arm of the government is saying, don't change passwords that are healthy and work, and the other arm, our regulator, is saying, change passwords. So we're gonna reconcile that and do some work on that. That might be 4.01 or something like that. But those are the types of things that our committees are going to keep working on to make sure that we're providing updated content and staying on top of all of the risks involved with dealing with best practices, especially with data security and money.
Yeah. And we did get a few questions about whether or not we also had a WISP template. Currently, we do not, but I'm told there's a good one available on the IRS website.
Good.
So check that out.
We started with a blank Word document and just copied and pasted best practice 3, and each bullet say, this is what we're doing. This is what we're doing. That's a great start for your WISP. That's a very good start. And then whoever your techie nerds are in your office can add in data security. Where are the servers? Are they locked? Who has access to them? Are they patched? Are they updated? Those types of things can always be added into your WISP. But start. It doesn't have to be 75 pages. It could be very simple to start, but having one is important. And May is really coming quickly.
Yes, it is. All right, and just a reminder, the URL there for all the updates and information and documents there on ALTA's website. With that, that'll bring us to the conclusion of today's presentation. Tara, Craig, thank you again for taking some time and walking everyone through the pillar changes.
Thank you. Appreciate you watching.
All right, thank you. Take care, everyone.